What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us, what's actually going on with the news and the data coming out for this week, and why you should be very, very cautious on the markets right now. I'm also going to talk about why on earth we do have some bearish developments so far. There's no guarantee they're actually going to play out yet, and when the market's going to start reversing, but there is a high risk of that happening very soon. I'm going to show you exactly why, what the charts are showing us, and everything like that. But before I break anything down about that, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends tomorrow, so make sure you check it out before they run out. Tomorrow is your last chance to get those up to 12 free stocks. Once again, this is a limited time offer. Please check it out if you're interested. With that out of the way, let's get on with the video. So SPY was down 0.24% for the day. We got a nice pop into the open off the bullish bank earnings that came out. All the banks that were reporting on Friday ended up beating on earnings. They did better than expected. The market popped, and then we got a bit of a sell-off after the new higher than expected inflationary expectations from the survey from the University of Michigan. And then after that, the market got one more bounce, and we just closed barely in the red, down 0.24%, pretty flat. So nothing too crazy. It wasn't that insane. I know the price action itself was crazy, but the close wasn't that bad. Only down 0.24%. But the real question is, where are we going to go from here? I just want to let you know, when I start talking about the charts in a couple of minutes, there are a lot of bearish developments coming. There is going to likely be downside in the future. I'm not saying it has to start tomorrow. Right? We could pop a little bit more before we start to see some downside, most likely, if the divergences are still valid. Or, depending on earnings, we could just start dropping from here. So I'm anticipating downside eventually. Either we pop up more and then we see downside, or we just, straight up collapse from here and we just see a big, big, big pullback. It's got to be one of those two. And that will depend heavily on earnings and other factors. In this video, I'm going to break down exactly why. But to start us off, let's actually look right here. What data is coming out this week? And the answer is we actually have some manufacturing data. We have some building data and housing data, and also a Fed speaker on Tuesday. For Wednesday, we have the mortgage applications and also just some crude oil data, followed by initial jobless claims on Thursday, and then PMI on Friday with some Fed speakers like the Cook and also Bowman and Waller. So we have some data near the end of this week. In the beginning, it does not matter as much. But when it comes to the earnings, this is what's going to be a lot more pivotal for the markets. For Monday, we have Charles Schwab, M&T Bank. Charles Schwab is going to be a big one, by the way, for tomorrow. First Bank. We also have, Service First Bank. That's another big bank. A lot of big banks are going to be reporting earnings, lots of the regional banks. Make sure you're ready for that. For tomorrow, it's going to affect how we open. For Tuesday, we have Netflix, Johnson & Johnson, Goldman Sachs, United, Bank of America, another big bank, right? We have lots of big banks for Monday and Tuesday. We have just as many on Monday, I would say. Wednesday, we have ASML, which does not have the strongest expectations. Morgan Stanley, a big one before the market opens. Tesla, the big dog. Tesla is going to be reporting earnings after the market closes. Then IBM and Discover. So lots and lots of giants coming out for Monday through Wednesday. We also have some giants like Nokia and American Express for Thursday and Friday, but not as big compared to Monday through Wednesday. So make sure you are prepared for this. Now, when it comes to SPY, the last piece of data I'm going to talk about would be the options chain. We have something interesting. The options chain is not too crazy throughout the week, except for Friday. We have a 401 max paying 3+ million puts out of the money with 50,000 in the money. Right, 3.15 put to call ratio. What does this mean? Well, if I was the market maker, I would try to keep the market up to hurt these shorts. But the thing is, the market makers are not invincible. And they don't always try to be. There's some instances where they actually let the market pull back a bit. They like to save capital in the process of doing so. But what's going to happen is this. The shorts, the other institutions that are playing around in this, they are going to fight fight this week. They're going to try to get a lot of these out of the money puts in the money. So I am anticipating lots of volatility. And the odds are favoring some downside because of that. I do believe they're going to fight. They're not going to fight easy. It's going to be a tough fight. And we have to be ready for this because even if SPY pumps up more, we're going to be hitting some very, very major resistance levels. And that's where a lot of shorts could be lingering as well. But now let's break down the charts. What's going on with SPY right now? We have a clear bearish divergence developing. Keyword is developing. I'm not saying that this means we have to crash immediately, but it is developing. What this means is when you look at the MACD, like I said in my previous videos, clear downtrend on the PPO. If you look at the RSI, clear downtrend. If you look at the price uptrend, we closed higher than where our peaks were back here around early May. And also we made a new peak at 415. So there's no clear trend of a trend break so far. We do have this gap down here around this 408 area. Very important to note. So let's talk about these levels. If we're bullish, okay, we want to watch 414. If it breaks that, 416 becomes possible. But we did get smacked around 415. That just wasn't noted as major resistance. We have stronger resistance around 416. Break that, there's 418, then 420. All pretty strong resistances. That's the more bullish case. The more bearish case would be a retest of the 50 EMA, 409, a gap fill down to 408, and then we have to hold 406.5. Super important support. I'm sorry, 406 flat, not 406.5, 406 flat. If it 406 fails, if we fail at 406, this thing is going to get smacked all the way down to the lower 400s, right? It's kind of like one of those Jenga towers. One of them just you just pull out one of those blocks of woods and then it just comes tumbling down. That's similar to SPY right here. It's like a tower, right? If you destroy the foundation, those major support zones, it's just going to come tumbling down. What do I think is going to happen? I'm honestly not 100% sure because it depends on earnings. Okay, it's going to depend on earnings, so be prepared for anything. But what I think is there's going to be downside either starting on Monday or we pump a little bit more. Maybe the bank earnings aren't that bad. SPY tries to get all the way up to about like 418 or so, and then we get smacked down after, right? Shorts could be lingering up there. And this divergence, as long as it remains, it's going to potentially play out. All right, it's got to be one of those two. I'm really like 50-50 on that, whether we start downtrending now or we just pump a little more and then we downtrend. It depends on earnings, but I am anticipating a downtrend coming soon, possibly this week. All right, what else is helping with that claim would be the dollar. The dollar is actually at 0.56 for today. I just want to note that looking at it on potentially like different charts, such as the daily, you could see that the dollar bounced off this 100 level. It's starting to hold up. We do not have a divergence though on the daily. I'm trying to look for it. Actually, we technically have a divergence. Let me just double check this. The RSI was at 31.9 before, and it actually it hit lower levels. It actually hit higher levels, and we made a lower low. So technically, there is a bullish divergence on the dollar. Technically, it could still be developing because overall the RSI is making higher lows, barely higher lows, but the dollar is actually making lower lows. So the dollar might start breaking out here. If that happens, it's going to be bearish for the stock market. We just need more confirmation. The dollar tells me, what the dollar is telling me is the stock market is either going to drop a little, the stock market is either going to rally a little bit more as the dollar drops and then the dollar bounces and the stock market ends up reversing, or it's going to just happen from here. Either SPY and QQQ in the market pumps a little more and then it tanks, or SPY ends up just straight up tanking from here. It's got to be one of those two. Very hard to predict right here. Depends on these divergences, but the odds are favoring downside soon from a technical standpoint. It will depend on earnings, of course, but I just want to note that. I also do apologize if my Wi-Fi is a little slow. I am actually recording this from a different place. But now when it comes to Tesla, I just want to note that Tesla was down about 0.48% for the day. It's getting tighter and tighter and tighter. Could Tesla break out? It is a possibility because it's going to be approaching earnings very soon, and it does like to actually rally approaching it. However, I want to note to everyone, if there's downwards pressure by the markets, it's going to slow Tesla down. Also, Elon Musk announced that he's going to be starting another company. And this tends to be bearish for Tesla because Tesla does not like it when Musk is just starting company after company after company. lots of investors want him to put most of his time for Tesla, not for some other AI company. And in my opinion, it's his choice. He could do whatever he wants. But from the eyes of a Tesla investor, that's not the best of news. So we might see Tesla just chop around a lot, trade sideways, and then eventually it could start to pop as we approach its earnings. But that is going to depend on the other earnings from like the big banks beforehand. I am anticipating though some sideways action and maybe a break to the upside as we get very close to earnings. So I am seeing that for Tesla. It might outperform the QQQ and also SPY. But please be warned that if there's downwards pressure because of the market, it might slow Tesla down. It might not rally as hard. Okay, so once again, sideways action and maybe a bit of a rally as we get closer to the 19th, 3 days away for Tesla's earnings. For the HYG, it's a little bit red, just like the market. This thing has been actually showing some, once this lows, you can actually see some bearish potential developments. And that's because of the fact that we also have this other declining RSI, at least for the time being. We don't really have a divergence that formed, but we do actually have, once again, this overall trend that is not necessarily holding up too well. We are technically forming almost like a double top on the HYG. And if it does end up breaking below the 50 EMA, I'd become concerned for SPY and the markets, which tells us that smart money have a very different view overall. When it comes to Microsoft, what's going on with Microsoft? Well, I just want to note that on the chart, this head and shoulders is still technically valid, but so far it's holding up okay. There's a chance it might try to get a bounce and fill this gap, and then it ends up just tanking from there. We do have a gap up here. This does depend heavily on earnings. But in my opinion, overall, the RSI did form a bearish divergence here. It did downtrend a bit, bounced a little bit off of it. And overall, it's just holding up. My best prediction would be this thing bounces a little bit first before we do see more downside later on. It looks like it might try to go for that gap fill, so it could try to approach 190. But if it fails, here's what you have to watch just in case. Watch this 284.3 level around that area. If that fails, 281 could come. If that fails, it's going to come tumbling down pretty hard to fill this giant gap right here. And I do believe it's going to do that over the next couple of weeks. I don't know if we're going to bounce a little bit first and then we come down to fill the gap, or if it just collapses from here. But I do think the odds favor a bounce first before we end up doing that. For the triple Q, one of our favorite stocks out there to essentially trade, I want to note that the triple Q is actually looking pretty weak in a way. Not too weak, it's just barely holding up, but it has some weakness, right? It has some weakness to it. If we're bullish, it has to break above 321 and try to get to about 324.5. If we're bearish, it's going to retest 316. If that fails, it's going to fill this gap down around this 314 area. If that fails, it's going to come all the way down to 306. Just like SPY, right? It's like a tower, and if you destroy the foundation from the bottom, it just comes tumbling down. Similar with the QQQ, which is showing some weakness. In my opinion, this is going to depend on earnings. I think it might pop a little bit first and then it ends up coming down. We might try to see this thing retest 321 first and then we just get a rejection. We'll just have to wait and see from there. But I am anticipating it's just going to get tight here for the time being and it might end up downtrending. This will depend on Tesla's earnings and other factors like that. The VIX is starting to look very, very weak in a way. It is actually continuing to downtrend. There's no clear sign of a bounce. But on the weekly, the VIX has a bullish divergence. It's turning bullish. I don't know exactly how this is going to look, but my best prediction is going to be this. The VIX is either about to bounce from here because of the market downtrending, or the VIX is going to drop a little bit and then bounce, which tells me the market either pops a little bit, then drops, or it just straight up collapses from here. Amazon, in my opinion, Amazon also is not looking the best. It was a little bit in the green, but overall, if you look at the weekly time frame, once again, a pretty bullish looking weekly candle. But on the hourly time frame, we could see a bit of a pullback first before it makes a big move. Earnings comes much later for this. What I'm anticipating for Amazon is it could actually make an attempt to pump a little bit. We technically have a bullish triangle right here, so it might try to get to this 104 and then reject. Or it might come down to eventually fill this gap. I'm guessing this thing's going to pop a little bit and then end up coming down to fill this gap. The odds are favoring that based off this MACD, based off the development right here. One more pop, then more downside. Seems very likely on Amazon. Nvda is holding up okay so far, but I just want to note this thing still is giving me some more signs of weakness. The reason for that is because of the fact that we have this nice head and shoulders that has been developing. Overall, it's still valid. It hasn't really done too much. It did break below this 264 level. If it collapses below 260, it has a lot of downside coming. All right, make sure you remember that. It could try to get a retest of about almost 270 first, and then it could reject from there. We do have quite a bit of resistance there. If it rejects after one more pop, it's going to likely chop for some time and then potentially come down all the way down to 260, 258. I mean, if those fail, this thing has a lot of downside coming. It's very overextended. I just think it's a matter of time. You just have to give it some time, a few weeks or so. But eventually, I do see some downside coming. Finally, for Aapl, and I'm just going to end this one with Aapl because I actually have limited time and my Wi-Fi is just not really helping me. For Aapl, we have a possible double top like formation that formed. There's this big gap down here. I think it might try to pop and retest 166, then reject and come down, or it might just reject from here as we're seeing some weakening on the PPO on the hourly time frame. It's got to be one of those two. Most likely downside is eventually going to come. Please be ready for it. Finally, for the 10-year Treasury yield, we're starting to show some strength. This is once again more bearish for the stock market. Because if the 10-year Treasury yield continues to break out, if it breaks the 1 hour 200 EMA, it's going to turn pretty bullish. It could actually get all the way up to 36. If that's the case, that's going to be bearish for the stock market. But we do have this gap down here, so I don't know if we're going to fill this gap and then just start rallying, or if this thing just keeps going from here. If it comes down and retests 34-ish around that area and it just breaks down to fill this gap, that's going to be bullish for the stock market. Maybe the stock market has a little bit more room to go, but it might bounce again, and that could turn bearish for the market afterwards. This tells me the stock market might pop a little bit and then end up collapsing, or if it doesn't come down to fill this gap and gets like a back test, if it just keeps going and going and going, that's going to be bearish for the stock market. So downside could just come much sooner. It has to be one of those two. We either see more downside for the market first, or we get one more pop, another bullish continuation in the stock market, and then we see the downside a little bit later. It could be a little delayed. The reason why I'm indecisive, guys, is because I'm not a fortune teller. I do not know what earnings are going to bring us. So it makes it very tricky during this specific cycle. But if it wasn't for this cycle and wasn't for earnings, I tend to be more confident. I'm just very open-minded right now, so I want you guys to be prepared for anything. But like I said before, the charts are telling us that eventually downside will most likely come. All right, so thank you all for listening. Please have an absolutely incredible rest of the day, and have some custom merch for you guys either above or below the comments section if you are interested in buying a shirt or tank top that says buy the dip, or a hoodie, or a really nice shirt. There are also some custom shirts by me. If you're interested in buying them, it really is your own choice. Use the code SAVE5 to save 5%. If not, once again, completely okay. If you do, it will support the channel. But until then, thank you all so much for listening. Please enjoy your weekend, guys. Please remain calm, cool, and collected. Do what you have to do, and I'll most definitely see you guys in the next one. The market to the moon, because the long term is still incredibly bright, and peace out.